Good morning, traders. Welcome to the weekend update here for March 17th, 2024. So I want to first go through the existing open trades, and you'll notice in looking at the diagram above that one of them is missing. I don't know why. I'm going to get that clarified with the developers of the software. I do have a snapshot of it that I was able to get from a different way through the software, but it's not showing up on this main page. So let me just drop this one in first. I can enlarge it a little bit. And this is our rut trade. Let's go the correct direction here. And so this is the rut flat fly butterfly with a long call trade. And it is up nicely at this point, and we have been thinning this throughout the last week or two. So it's down to just a single butterfly right now and the long call, and there is an order out there to close this last butterfly. Now, if that last butterfly closes at the price I have out there, which I believe was $27.50, if my memory serves me correctly, at that point, the long call would get closed out, and this position would get closed out for around a 10% profit and a little over $1,000 in P&L. So my expectation is that barring any crazy market movement this week, if we just kind of chop back and forth in this range on rut, this should close Monday, Tuesday, somewhere in that given range. So again, that one is not showing up right now for some reason in our grid here, but I hope to have that resolved here today on Sunday, and we'll be back normal operation on this come Monday. So the other class trades that are open, we've got this broken wing butterfly that when the market had rallied up hard and was up here close to about the 5,200 range, I added this short call spread to kind of juice this trade a little bit. Obviously, our market's pulled back since then, so right now that's playing out very well. That is adding P&L to this trade. I will likely start putting out an order to maybe thin some of this one out, possibly this week. This is, of course, quite a ways from expiration yet, 44 days. But if we can, squeak some profitability out of that, essentially lock in some profits, reduce our risk, and then use those funds to redeploy elsewhere, that seems like a good logical game plan. If our market kind of stabilizes and volatility drips out here a little bit, if that does happen, this is going to show increased profitability rather quickly. The SPY trade, similar story here, looking for more decay to creep into this, which I expect would happen this week. Again, fairly wide range on this. So this had been adjusted a couple times. Probably not going to, look to get maybe a full 10% out of this because there was a few adjustments. And because the range is a little bit tighter here after those adjustments, I may reduce what I'm looking to get out of this, but we'll see how this plays out through the week as well. Again, still a fair amount of time in this 33 days. The Apple trade, unfortunately, again, that start on Apple was not a good one. But this thing continues to kind of play out how I would expect after adjusting this, after adding a larger call spread on this side. So if Apple continues to chop in this, 165 to 185 range, we're just going to let this decay and start to thin it as we get up around to, the break-even line here, and then hopefully squeak some profit out of that after that point. This is a new trade that was just put on this last week. It started life as a flat fly, which had negative delta, and we were expecting a pullback in the market, which did happen, which added some nice profitability to this trade out of the gate. And then late in the week, as the market continued to sell off a little bit, I adjusted this by essentially removing one of the legs on this side, essentially flattening the delta in this trade. It had been a negative delta trade, but as you'll see when I go to look at our charts here in just a moment, there's a chance that our market could put in one of those rather aggressive upside bounces here soon, and I didn't want to get, caught if that were to occur. I will say right here as we're looking at this P&L line is not really displaying correctly. That's largely just because of the Here we go. This is a more accurate depiction of that line. So, it had been prior to that adjustment, our T0 line drooped down here, which meant if we did get a quick, fast snapback rally, this position could be down. And I personally looked at our market, looked at the projections that I'm envisioning in the market, and basically said, you know what, yeah, we could break to the downside, but right now, since the market is still technically in an uptrend, I feel like the path of least resistance, unless the market shows me differently early this week, is up. As such, I wanted to take off some of that upside risk, hence stripping out one of these upside spreads right here, stripping out one of those call spreads, raising this right leg a little bit. So those are the positions that are currently on. Depending on how the market acts in the early half of this week, I might look at adding maybe a different sort of position later in the week. Again, we'll see how the market plays out, and we'll take a look at that closer to time. So let's just take a look now at the market itself. And let's look specifically at SPX. Of course, SPX sold off quite a bit here on Friday and a little bit on Thursday. So these are daily bars in the SPX. We have been in a protracted uptrend. We've been creating a flag pattern here. Let me shrink this out a little bit so we can see a little more of it. So we've been making this large flag pattern for an extended period of time. Now, flag patterns normally tend to break in the direction that they point. In this case, that would be an upside breakout. So right now, the flag pattern, we keep hitting the top of this flag here. I'll zoom back in a little bit now. And as we hit the top of that flag, we've been, rolling back over down to the bottom. And I mean, we didn't hit the top of the flag back here, but we started getting really close to it here, rolled back off, got really close here, rolled back about to the bottom, came up, touched the top of the flag, back down to the bottom, touched the top of the flag, back to the bottom. And we're right on this line right now. So a break, in my opinion here, a break of the 5100. And by a break, I don't just mean it dips a little below 5100. I mean that it goes below 5100 and maybe stays below 5100 for a day or two. If that happens, we may be signaling a little bit of a trend change at that point. So how do I evaluate a trend change? Well, there's a couple things that have to take place. First of all, we need to make a lower low, which we haven't made yet. Here we've got, a low, then we make a higher low. Then we sell off, we make a higher low. Then we sell off, we make it's a higher low. It's not a lot higher, but it's a higher low. So we're still making higher lows. We're still making higher highs, but it is starting to flatten a little bit. The highs aren't quite as high anymore. I mean, they're not exceeding the prior highs by as much. And the lows are getting a little bit closer together, which can be the start of a signal of a trend change, which is a rollover in our market. And given the amount that we've run in the short time that we've run, that would not be out of character. I mean, we've gone here from, down here in, 4,800 up to 5,200. I mean, that's a 400-point S&P run. That's 10% in 4 months. That's a lot. So I get it. We're fueled by AI, and but back in the .com era, which I was also actively trading through, we had the .com bubble. So am I saying this is a bubble? No, I'm not. Am I saying we've run a long ways in a short amount of time, and that is at least reason to consider that we might be a little overvalued and might be looking at a pullback? Yes, I have to kind of keep that in mind at this point. Now, the things that are making me think that this might not really be a place to roll over and that we may in fact just continue our upside trend or even break out to the upside is if we look at this blue line, this is the implied volatility line, it's still pretty darn low. And if we come in here and look at VIX, VIX bounced a little bit on those down days, but it's not really accelerating at this point. So there's not much fear coming into the market yet. We do continue when the VIX gets low, which means the fear is out of the market. It is each time making a slightly higher low, which means that long term there's a little bit of fear that's kind of creeping in, but these are still very low VIX readings, 13, 14, 15 range. So there's nothing here in VIX that's pointing to a lot of fear in the market or a potential hard and fast sell-off. Let's look at SPY since we can see volume in SPY. And in SPY, again, we're looking at essentially the same thing. Now here I've drawn a channel as opposed to the flag pattern. I could also, we're going to have the same flag pattern here as well. But I like to look at these from different perspectives. Some traders are looking they're looking at it as running in a channel. Others are looking at that flag pattern. So those are a couple different ways that traders might look at this. Either way, we're at the bottom of the channel right now. We haven't dropped through it, but here there is something a little bit different, and that little bit different is we do have increased volume on our sell-off days. So increased volume, if it gets sustained, as it did back here, those can mean more sell-off to come. We had some big spikes on a couple down days here, and then shortly thereafter the sell-off accelerated, the volume got higher. Then you'll notice as the volume gets lower, the sellers get exhausted. They start to, basically everybody that's gonna sell has largely sold at that point, and then you end up back with what they call firm hands holding those positions, people that are not really interested in selling. When those people are kind of wiped out, well, that's when the market will often tend to turn again, which of course is what has happened here. Here we had the start of a big down day, and of course we were outside of our channel here, which if you get a sell-off and you're outside the channel, you're going to have some volume. You're going to have some day traders and things that are going to look at this and say, oh, yeah, I'm outside that channel. That's a little overbought. I'm going to go ahead, take my profits and run. Had another day like that here. Then we had multiple days where, again, the volume was higher at the start, and then that volume trailed off. And then when all of those sellers were exhausted, then we started to get buyers back in. So as we get further and further out in time here, again, we're seeing kind of the same thing happening here. Our sell-off days are having a little more volume associated with them. Again, does not mean that we're going to, crack through this and run to the downside, but it is a little bit of a flag pointing toward that potential. So we just need to kind of watch this again and see what might show up on the downside here early this next week. And then for RUT, which would be the last symbol I'd want to take a look at here right now. So RUT just kind of continues to run in its channel, the big yellow channel here. It's been chopping back and forth, did pop slightly outside of that, but only, briefly. Now it's pulled back inside. But it is also obeying largely this uptrend line, making higher lows quite consistently. Even here, when this low, it did crack through that channel, but this is a type of thing I'm talking about where if it drops through this channel and it just drops through there for a portion of the day, and we don't get that downside follow through, well, this is just a little head fake, maybe, and then we're going to start rallying back up. Notice we didn't make a new lower low here. We had a low here, but it didn't go lower yet the following day. It rallied back. So we'll have to see what this week brings. If we do break to a new low here, again, the things I look for in a trend change is not only do I need a lower low, but then when we rally back up, I need it to be a lower high. So we're pretty much consistently making higher highs here. So if it rallies back up, it should only rally up to about the 2060. And then if it goes only to about 2060, below, these prior highs, and then it rolls back and makes another newer low, that would be considered a trend change. And at that point, we need to start taking a look at possibly setting up positions that are geared toward a more bearish focus. Right now, still considering this a pullback in a bullish market, and that's a great time to be adding trades like we did last week. We had the flat fly, let the market sell off a little bit, turn that into a broken wing fly with a little profit baked into it at that point. And that's kind of the perfect setup or perfect scenario. Also, at this point, adding a broken wing butterfly with little to no upside risk. That's another really good trade to consider in a pullback market where we are expecting stabilization or a rebound to a new high. So right now, again, general trend, still in an uptrend at this point, still making higher lows, higher highs. So what we're going to be looking for is some sort of a change that may or may not occur this coming week. But we have to be just a little more on guard for it than normal given the significant run-up that has taken place here over the past few weeks. So that's going to be it here for the wrap-up for our week of Sunday, March 17th. And as far as expectations for next week, again, we'll have to see if our uptrend line holds and we potentially chop sideways, break to new highs, or our downtrend line or the lower channel gets breached for a couple days, in which case we might be looking at a trend change. That's it, everyone. Take care. Thank you.